Hi, I'm Cody from Wall Street Breakdown. You know, anyone who tells you that investing is a lot like gambling probably treated their investing a lot like gambling. This is how investing is not like gambling. We talk a lot on this channel about fundamental analysis. What exactly that means and why we use that, and why most institutions that do any type of investing use fundamental analysis, why most activist investors use fundamental analysis, why everybody who ever made any money in the stock market basically uses fundamental analysis over technical analysis. So Cody, why do we use it? Why don't you explain it? Let's put on the glasses and get to work. Okay, the first thing I want to do is I want to tell you that the best principle you can instill when doing fundamental analysis or any kind of analysis is going to be the Pareto principle. So the 80-20 rule that you're going to get 80% of your results from 20% of the work that you do. That is going to be true when we're talking about fundamental analysis versus technical analysis first and foremost. So with technicals, you're going to get buy-sell signals, but it's not going to be enough to give you any kind of understanding of the company that you're thinking about investing in. It's just not enough there. It's great if you're day trading, if you want to use buy-sell signals. I understand they're already built into the platform. That's the reason why people use them, because it's easy. Because people want to believe the easy way to do this is going to be the way that they're going to get it done, because doing fundamental analysis means you have to do a lot of research. On the flip side of that, fundamentals are going to teach you things like the company's behavior, what they've been doing in the past, what the people in charge most likely are going to be doing in the future. See, companies are run by people like us, human beings, and we have a lot of behavioral traits that come shining through in anything that we do, and the leaders of companies have a lot of their behavioral traits come shining through down through the structure of the company and out into the marketplace. You're going to have to know what that company's behavior pattern is, and by doing the fundamentals, you're going to have a much better opportunity of seeing what that company could potentially be doing in the future with its actions in regards to other companies, the way it moves forward, how aggressive it is in certain different industries. There's going to be so many things that's going to help to give you an insight into. You're going to want to take a look at fundamentals to get their behavior patterns down to a T. On top of that, profitability and future potential are other things you're going to be able to see when doing fundamentals. As we break down the fundamentals in this video, you're going to see a lot better how you're going to be able to predict the future a little more easily. Technicals are not going to do that for you. If you're investing in something over a long time horizon, the idea that a technical analysis chart is going to do anything to help you see what a company has going on in the future is foolish at best. You're going to have to do a lot more digging than that. The fundamentals are going to help you with that. Not only that, but the standing in the marketplace of that company. You're going to know before you even get started where this company ends up being in the pecking order. It is an absolute shark-infested water wasteland out there in the investing world. You are going to want to make sure you are running with a winner, and that shark better have a nuclear bomb attached to it, because everybody is trying to take you down at the knees. If your company has any weaknesses, you better believe that the company you invested in is having those weaknesses exploited by their competitors. So, with that being said, technical analysis, useful. Useful in a sense. Do I use technicals? I absolutely do. I use technicals in all sorts of different things, and I use some charting in fundamental analysis as well, but is it the absolute crux of it? No, it's not. So, 80-20 rule on the Pareto principle as well. When you get into fundamentals and you decide, I've done all this stuff, Cody. I did everything that you talked about, and then on top of that, I went out and found 20 other things that I really liked that some other guy told me about it that I figured out myself. And you've broke it now down to the things that you find to be the most efficient when you're picking out whatever it is, a specific company, a company out of a certain industry, however it works for you. You're going to then want to implement that 80-20 rule again and make your study time the most efficient that it can be, because you know, and I know, that you're going to be getting the best results off of your instincts by picking the things that resonate the most with you. You are not going to be emotionally invested in these companies. So you are picking things that are letting you know this company is a winner or a loser, and you're doing it completely emotionless in regards to this. You don't want to own it or not want to own it. It should come down to a fact where you look at it and go, from an investing standpoint, as an investor, I have to own this. At this price or around this price, I have to own this company. This company looks phenomenal. So let's take a look at some of the fundamentals you need to know. What is this company you're investing in? What do they do? Who are they? Where are they located? What are their products and services? What are their divisions and their subsidiaries that they own? You can go into all sorts of quarterly reports and read through the transcripts, find out everything you can about this company. If you don't know about a company, why would you want to own that company? You know, you want to have all the information that you possibly can. Go to the company's website, look at their investor relations tab. I'm sure every publicly traded company has one. Go out and use Wikipedia, use Yahoo Finance, use FinViz, use Google, use anything you can to read into what this company does. And then use their quarterly reports to delve deeper into their divisions and see just exactly how all these divisions are broken up and what they're doing in all the different marketplaces that they reach into. It's going to be very important because these companies are going to be interacting with a lot of other companies out there. It might not seem like it, but the fact is everything is interrelated nowadays in this global economy. And your company is not going to be a standalone. It is going to have a lot of other companies and a lot of other economies, commodities, all sorts of things impacting the way that they do business and ultimately impacting their bottom line. So you want to make sure that you know everything you can about what this company does and where all the weak links potentially could crop up, and then go check on those weak links and make sure those weak links are as strong as they need to be before you decide to do any type of investing. So we want to know, what are their main suppliers? We're talking about the weak links in the chain. What do you do if one of your suppliers over in Thailand has a problem with their government, or there's a union strike and things slow down, and that's your main supplier over there? That's where you get the majority of your stuff. How much inventory does your company hold in regards to that supplier to satiate whatever kind of downtime there may be in regards to getting that supply back to them? To how easy is it for them to go find other suppliers? Do they use multiple suppliers for those things? It's very important to know just exactly who supplies everything for what your company ends up doing, because ultimately there's somebody that's sending them something. They're not just running an empty business over there. They're interrelated with a company, and they need to know that company is as at least efficient or on time as they need them to be. We don't need them to be efficient enough for everybody, but we need them to be doing the stuff we need them to be doing. That's for sure. What other sectors are they reliant on? What other sectors are they invested into? You know, like they might not be invested monetarily, but they're invested business-wise. If you're Delta Airlines, you're invested in the commodities sector. You're invested in oil, right? You want to be hedging your oil. You're invested in Boeing and Airbus, and you're investing in the mechanics and the people that make the components to replace parts on the plane, and all the electrical stuff. And then on top of that, all the planning and scheduling and the debiting and the crediting, all the technicals to actually book people's flights from around the world, and all the stuff that goes on inside the actual airport and all that. Delta has so many different companies that they would be interacting with, sectors they'd be interacting with to get their business off the ground. It's not as simple as putting up a sign and flying a plane that never breaks. That's not the way it works. There's just too many things that are interacting here. You need to know what interacts with that company you're thinking of investing in, and know how stable those interactions are going to be. Because ultimately, you have the price of something that's relying on oil, where a company doesn't have a hedge in it. Oil finds its way, like it has right now, up to almost $70 a barrel. What if oil finds its way to 100? And margins are for oil to, they can't sustain profits unless oil stays under 85 a barrel. What then? Have they hedged in? We don't know. You need to know. You need to know. All that information is public. You need to know what exactly is going on in those companies and exactly who they're relying on. Suppliers, sectors, hedging, all that kind of stuff. Where's your company located? Where are the goods they're shipping, the services they're sending, where is that located? And how are the economies in both places doing? We want to know how well everything is doing. We want to know the cost of real estate. We want to know if anybody's ever going to decide to trade out of using your product or service because of the expense that they're being incurred in their economy. Is there a cheaper alternative? And then that gets into your sector. You want to know all about your sector. What's going on? Who are your competitors? What are your competitors doing? Are they doing the exact same thing you're doing? Are they doing them better? Where does that company stand in the pecking order of that sector? I can assure you that sector has a hierarchy. What is that hierarchy? That sector would have an ETF somewhere. Go take a look at the ETF. See how that ETF is doing. See if there's companies that are outperforming that ETF significantly and where the company you think of investing in is performing in relation to those companies. And not only in relation to those companies, but check out the price to earnings. And we'll get into price to earnings in a second, but check out price to earnings and see, because a lot of sectors have a very defined range of where companies play in a price to earnings before they become well overpriced. And obviously that's not a tried and true. That does change on occasion. There are growth companies that play well outside the norms of the price to earnings range. But there are a lot of companies that are very defined already that are going to play in that range. See where your company is in relation to the other companies in that sector based on their price to earnings. Basically the amount of the cost of the company to buy it based on the amount of money that they bring in is basically price to earnings breakdown. But we will do a price to earnings video. Don't get too hung up on this. We're just trying to give you a nice overview of all the things you should be looking at. But who are the leaders in that sector? Are you the leader? If you're not the leader, why would you pick the company that's not the leader? Do you think the leader maybe is a little overbought? Do you see your company doing something in the future with all the research and development that they're doing, or a merger, an acquisition that they've recently brought on, or just a change in company direction, or just pushing through the way that they're doing? Do you see those things being the tipping point to push your company from the middle to near the top of the pack, which ultimately is going to add to the growth in share price? Do we see that kind of stuff happening? How do you see it happening? You need to be looking at everything and knowing exactly how everything is interrelated. I know this seems like a lot of work, but trust me, when you get efficient at it, this is literally, a day of research. You sit down, you break all this stuff down, you'll know where to go, where to find it. With each company, it's a little bit different. And then as you own companies, you will be doing a moderate amount of upkeep, keeping up on things like the news. What's going on in the news right now? How's that affecting the company? Was there a quarterly earnings coming up? Is there a quarterly earnings just behind us? How did that affect the share price? What are the volumes out there? We notice any type of volume trends. Obviously this company trades in a certain type of a volume all the time. We're hoping you're talking about a blue chip company here trading in the millions of volumes every day. And we want to know, is there any kind of volume outbreak, downslope? Is there anything going on with the volume that's making you wonder, hey, is something going on? That's where looking at things like the news is going to help. Even though, remember, the news has been reported and has been priced in, you can assure yourself of that. A lot of times things get priced in before they happen, hence the reason you'll get a big pullback or a buy-in before an earnings call, and then the earnings call won't be what they thought it was, and then there'll be a big correction, and you get a lot of that. So don't worry about playing what's going on that specific day. But the news is still something that's very important, because everything can compound on everything else. So we want to make sure we've got the finger on the pulse of what this company is doing in their divisions, in their sector, in their economy, what their competitors are doing, how their suppliers are doing. We want to make sure we know all that kind of stuff. We also want to know the CEO, the CFO, the board of directors, the inside investors, and what kind of what kind of word do the inside investors have in regards to the board of directors and stuff. We want to know the histories of these people. If you can, go and read them up. It's all information that's public. Who are these people? How long have they been there? What's the life cycle of the turnover for your CEO and stuff like that? And what's the culture there? What's the culture of this company? How does this company behave? Does it behave in accordance with the CEO and the board of directors and their history? If so, then it's probably going to go forward doing the same. Or is this, if we just had a changeover and now we've got a different mentality that might be calling the shots, and it might be a gradual, most of the time it is a gradual culture change into what the new board of directors, new CEO, new CFO see their company doing, because they've been in places before where they've used similar tactics and it obviously ends up working, hence the reason they're moving up in the world. So your company could be looking one way today, but if you don't look at the big picture of everybody that's involved in the way things work and their human behavior, because the behavior is going to be the key, we don't know where things are going to go in the future. So we, without our crystal ball, we've talked about this before, we are trying to predict the future. We are not trying to just assume it. We are trying to take all the relevant information that's out there right now and say, does this look like a winner based on all of this? And that crystal ball, while not being real and not being tangible, becomes a lot less like gambling and a lot more like investing when you're checking off all these boxes and making sure you know exactly what the fundamentals of this company is and who this company is and what they're doing and how they interact in the marketplace and how their competitors and suppliers interact with them. Now, there's going to be some other technical analysis or numerical analysis you're going to want to do, and you're going to want to use a lot of the time as comparables. So again, we get into the price to earnings. We're going to want to take a look at that. Trailing price to earnings, more important, is going to be the forward price to earnings, though, because we're more concerned with what's going on in the future than not in the past. But trailing price to earnings is still something you're going to get seen reported quite frequently. The price to book, price to tangible book. We're going to want to take a look, like I said, at the float and the volume and how often things. We just want to make sure we're in stuff that's liquid, but obviously we're talking about being invested in Ford or, being invested in General Motors or whoever you want to talk about, Kimberly-Clark. We're invested in Procter & Gamble. It doesn't matter what the company is, but it's very liquid. You're not going to have a bid-ask spread of anything. Basically, there's not going to be a real problem as in regards to getting in or getting out at a number value that's feasible for where the market has that company right now. We're going to want to look at the 6 and 12 week or 12 month range. We're going to want to take a look at exactly where things have been trading. Are they on a big upswing? Has there been a lot of this? What are the reasons for that? What's the volume been like when there's been a lot of this? Was that a lot of news? Has it been going like this? Do we see that maybe tapping out? How does that relate to the price to earnings? Where's the price to earnings in relation to their overall price to earnings average? There's so many things that end up becoming valuable in this that it's you that has to deduce what you want to use and what you think is going to be the most valuable when you're doing your research. Take a look at the company's guidance, right? Again, we're talking about looking at their quarterly earnings. Take a look at the company's guidance, see exactly what their guidance says going for the future, and see how you break it down, how other analysts break it down, and then see if that guidance seems to correlate at all with what you're seeing, because a lot of companies will well overshoot, a lot of companies will well undershoot, and a lot of companies seem to be on all the time. Again, it goes back to knowing the behavior of your company, because companies have behavior patterns, no question about it. The dividend, and as the dividend increased, has it been canceled ever? Have they stopped the dividend? Is the dividend there all the time, quarterly, biannually, whatever it happens to be? Is it constantly being increased with the EPS? What's their tax rate? Where do they do the majority of their business? Are they headquartered in the United States? So what is their effective tax rate? You want to know all these things because everything is going to affect stuff. So if you really want to get down the rabbit hole of fundamentals, EPS and revenue histories are going to be important because you want to see trends moving upwards. There are so many things. Ultimately, you need to step away from this company, whatever it is you're thinking about buying. You need to step away from this company and say, how can I not own this company? This here seems like the winner. It seems like a winner. There's going to be multiple winners. We know that. There's going to be multiple losers. There's going to be multiple winners. But this seems like a winner. This seems like a winner at this price. This seems like a winner because of these reasons. This doesn't seem like a winner because lines intersected like that. That's not how you invest. That's how you gamble money. This is how an investor invests. Break it down. Do the research. Do the reading. Let it all sink in. Process the information. Don't fall in love with a stock. And then don't be scared to hit the buy button if it's time, or to walk away and say, it was good to do the research, but right now, this company isn't a viable investment for me. I'm Cody from Wall Street Breakdown. If you haven't already, click the subscribe button, notification bell, thumbs up for this video, all videos, thumbs up for you guys for doing all your homework, comments, leave us some comments. We love hearing from you guys, and we will be back with another video in regards to this fundamentals, where we're actually going to take a company and break it down through the way that I would do the fundamentals for it. And we will be bringing you that. And I'm sure Anthony will be putting that in some sort of a playlist underneath this video. But until that video is out, we want you to have an excellent rest of your day.